So we got the exact move that I was looking for. If you remember from the last Sunday video, I was referencing the potential for a short-term pop in the S&P 500, ideally to around 4,500, maybe a little bit over, followed by a lot more downside to begin the down leg for the rest of this correction. We did end up receiving both of those things, first the pop and then the subsequent drop afterwards, and now we're all the way down around 4,320. So a major move to the downside. I'm really happy with how this sequence played out, and with all of this newfound volatility from last week, that also means there's a lot of opportunities going forward for trade setups. So that's what I want to share in today's video. But before I do share that, look at the dark pool premium at the end of the day on Friday. This is a lot, guys. We saw 473 million for this singular dark pool print. These aren't even signature dark pool prints. These are just singular ones. 473 million, 533 million, 430 million, 365 million, 322 million, etc., etc. As we go down, this is a lot of premium, billions upon billions worth of singular dark pool prints around here for just SPY. And this is at 430.38. So what I want to do is go over to a SPY chart. And I want to mark these down because this level is going to be critical, especially at the start of this week. Based on how much we've fallen so far, I do expect these to actually be buys just because of how much we've dropped at the moment. So I will mark this chart roughly around here for this week. If we can stay above it, especially whether you just are an intraday trader or you are looking for a shorter term swing, if we can stay above this level, especially early on this week, we can see a bounce to go a little bit higher. There is a downtrend pattern that could break to the upside, at least for a short-term retracement. That's personally what I'm going to be watching for early this week. Roughly around here would be the trend line. So if price can stay above 430.38 and then can continue up to around this trend line and break above it, ideally you're looking at 15 to 1 hour candle confirmation above. If that is the case, we can see a lot more upside back to around 436 roughly. The high end of this would be right around 438, right around this gap that we had from previously, or at least the large gap down. So that's what I'd be watching for as the max move of a short-term retracement. Now, the reason I say a short-term retracement is because I believe there is still a potential for a lot more downside. So after having some form of a short-term bounce, whether it starts here at 430 or we have a little bit lower price discovery to around 428 early this week, I do expect it to be a relatively short-term retracement that should end up selling off afterwards and then complete the final low, which ideally would be somewhere around 420, as crazy as that sounds. But that's been an area that I've been watching for a while now and would like to add long exposure on if given the opportunity here. So regardless of that, at the moment, in terms of the short term for this week, I am looking for some form of a short-term long setup, whether that be 2 to 3 days or just a tad longer. That is my expectation for this week. Of course, always best to look for confirmation. So if we did have lower price discovery to start the week, I'd wait for another break above this key dark pool level around 430.38 to add for further upside. If we stay above it going into early this week, then I'd look for a breakout above this trend line right here and then take that breakout all the way up to around 436, 438 at the absolute max. So that's the main trade setup that I'm watching for this week. Also, another key development from last week is we had a large breakout on the dollar. Now, the previous week, we did have a strong weekly close, as you can see over here in the 15-minute chart on Friday, which meant that the dips should have been bought up throughout the following week, which did end up being the case. We had a dip get bought up over here around my yellow trend line, as well as over here intraday on FOMC day. This also got bought up. So of course, this does apply a lot of pressure on equities. Strong dollar can lead to more weakness on the S&P 500 as well as just equities in general, and that's what we saw last week. So it still is above this yellow trend line, and as long as it remains above, that will be the case where we see excess weakness in terms of equities. So this is something to watch at the moment. The trend line is roughly around 105, 105.1, and similarly to the dollar, if we look over here at the VIX, this is another key one. We are right up near my 1760 pivot level. This is a convergence of not only a key pivot that's acting as a resistance, but also a key trend line. This trend line has been respected numerous times by the VIX. This is also where we rejected on the daily chart, at least, because we did have a breakout on the 15-minute chart. But as of the daily chart, spot over here, we did get rejected. Over here also was a rejection spot. I do expect it to be another rejection spot, at least in the short term, once it is touched. So for this week, if we do go up and touch around this level, I do expect there to be rejection on the daily chart, similar to over here, how there was some more upside intraday, but it rejected by the close. So if we do have a scenario like this, that is a very viable setup for a short-term long. Like I just shared on SPY over here, we have a little bit more downside to around 428, where the VIX would touch this 1760 to 18-ish range, and then followed by a pullback in the VIX, which would mean upside in the S&P 500 since they typically are inversely correlated. So that is something that I'm watching for that would back that SPY short-term bounce setup. And eventually, after some form of rejection off of this, I would expect an attempt to break out actually above this yellow trend line. Vol has been subdued for quite a while now. So this test is certainly going to be key. And we're also looking at a potential cup and handle pattern if we do retest up here. If we were to get a little bit higher to retest around this 1760 to 18 range and then had a pullback off of it, you're looking at a cup over here on the 15-minute/hourly chart, followed by a handle, and then there would be a large breakout to the low 20s afterwards, which would align as well with my correction target of around 420 on the S&P 500. So that's what I'd personally like to see. But as of variables that we are able to control for this week, I'm just looking for that short-term long setup on the S&P 500, and then I will go from there. But last thing I do want to mention here, as well as the dark pool prints that I showed you earlier in this video over here on SPY, I do want to mention some of the key levels for signature dark pool prints from last week. One of the reasons why I'm so interested in signature dark pool prints is we can identify key ranges of accumulation as well as distribution. And because we've sold off so much in such a short period of time as well, I am looking for some type of accumulation around this 430 level. If we are indeed able to see some type of a bounce from around here, it's always good to look at that, especially macro-wise. If we start seeing a lot of accumulation between 420 to 430, then that is a viable long setup for a lot more upside after this correction, which is my expectation. But I'd always like to see the variables converge real time, and one of those variables would be a lot of signature dark pool prints. So as I go down through here, not too many large prints, a lot higher up in the 440s, only 1.6 billion here and 1.7 billion. But as I scroll down, we will start to see some larger ones, just like this 3.6 billion print at 438.55. We still are meaningfully below these levels because these are in chronological order. So this is a large sell before downside afterwards. We had a couple gap downs after that. As I scroll down, the main area that I am looking at is this 431.37 as well as 430.38 range. We have 3.6 billion in premium at 431.37, and of course the 4.7 billion of total premium for singular dark pool prints that I shared with you earlier in this video at 430.38. This is a lot of premium, guys. This is a lot in this range. Typically after a large sell-off, when you see premium like this near the lows, that is not normally selling. It tends to be buying. So that's why I'm so interested in this range. This is a lot of premium. If we can have a pop, especially if we just stay, like I said earlier in the video, above 430.38, we can start to see some type of a short-term bounce to the upside, because it seems that institutions at the moment are accumulating a lot of shares around this 430 to 431 level. So if we can clear both of these, especially 431.37, we're looking at that bounce, like I was sharing earlier in the video, to 436, 438 max before some more downside afterwards. So this is a large accumulation phase at the moment. So this is a very important data point to be aware of, because institutions are interested in some type of a large support level around here, around 430, which can lead to a decent sized bounce as well. And just macro wise, they are interested around this level for potentially more upside into the end of the year after this correction is over. So definitely keep note of this around these levels, especially if we can get back above this. And other than that, as always, appreciate you guys watching this video, and I'll see you guys next time.